Level 1, 0, not negative 0. The gap between those two numbers is something you only understand after living on each side of it. 0 reads clean. 0 looks like a blank slate. No minus sign, no collection letter, no envelope with that little plastic window. Your balance says nothing, which is different from owing nothing, but the banking app doesn't care about the distinction. The app shows $0, and that number is honest in a way that feels dishonest. Friday, the paycheck hits. Sunday night, it's gone. You didn't blow it. The recurring bills ate it. Rent grabbed 40%. The car payment took 12%. Food got the scraps. The phone bill, the insurance, that subscription you forgot would auto charge. And by Tuesday, you sit down to do the math and realize you never made a single choice. Every dollar had a destination before it even showed up. The passivity breaks you more than the poverty does. 40 hours a week moving cash from an employer straight to a landlord, a routing number with a heartbeat. The exhaustion is real, the labor is real. The account balance at the end of the week matches the balance at the start. 0, like the whole week was a blank page. You attempt a $50 savings transfer. Separate account, 9 days of feeling good about it. Day 10, the check engine light turns on and refuses to turn off. That $50 comes back out. The separate account drops to 0 again. 9 days is how long your system survived. 4 months pass before you attempt it again. Someone shows you a compound interest chart. The chart projects $1.2 million by age 65 if you invest $500 a month starting now. You stare at it and realize it's meant for a different person. A person who has $500 a month. You have $500 a month the same way you have a summer house. In theory, in some alternate version of your life that isn't this one. The advice always assumes the surplus exists. That's the piece nobody mentions. Every book, every video, every financial plan picks up after the hardest problem is already solved. Generating an extra that exists is the hard part, not allocating it. You open the spending tracker on your phone. A pie chart appears. The pie chart informs you that $34 went at coffee this month, and cutting that out would make you a millionaire. You close the app. You know something the app doesn't. That $34 kept a Wednesday survivable. The app sees a leak. The app is optimizing a life it never had to survive. The horizon is what 0 actually costs you. At 0, your planning window shrinks to about 11 days. The next bill consumes your entire mental bandwidth. No laziness involved, no discipline problem. You're running a logistics operation in real time with no reserves, and every bit of processing power goes toward keeping today from falling apart. Long-term thinking isn't a personality trait. It's a luxury item. It costs money you don't have. Someone with money tells you to think bigger. You want to explain that thinking bigger requires a floor beneath your feet and you're standing on bare ground, but you stay quiet. You nod. The explanation sounds like excuses, and you're not making excuses. Physics is what you're describing. Being bad with money didn't make you broke. Being broke made you bad with money. Nobody at 0 ever hears that, and it's the only honest sentence in the whole conversation. November, the tire blows. $180, you don't have it. You swipe a card you swore you'd never touch. The card carries 26% interest. The tire now costs more than $180. You just borrowed from a future version of yourself who will be angrier and poorer than you are right now. Friday comes, the paycheck lands. Sunday night, it's gone. 0 again. Level 2 rests at $1,000. Reaching this mark required 5 months of dodging disasters. Accumulating cash played no part. You didn't get here by making regular deposits. Calling it a strategy implies deliberate control. The reality was merely the absence of a catastrophe. The balance remains static on the screen. 3 or 4 times a day, you open the banking app. The digits never change. Opening the app provides a rare moment where checking a bank account causes you no physical recoil. A strange shift occurs once the account hits 4 digits. You lose your sense of safety and gain fear. At 0, you had nothing on the line. The emptiness was awful yet straightforward. Holding $1,000 introduces a vulnerability. Dropping back to 0 after experiencing the buffer of 1,000 carries a heavier weight for you than never reaching the buffer at all. You acquired the asset and the anxiety in the very same package. You become obsessed with protecting the funds. 6 weeks pass on a bald tire. A replacement tire costs $180. That $180 represents 18% of your total net worth. The math demands a trip to the mechanic. Your dread of returning to the version of your life you just escaped overrides the math. The bald tire stays on the rim. Every bump in the road prompts a careful listen for a blowout. Surface streets replace the highway. You cannot fix any underlying issues with the first $1,000. The sum merely provides enough of a cushion to induce a paralyzing terror of new expenses. You face the inevitable crisis in month 6. A transmission fails. A medical bill arrives. Management slashes your hours without warning. The shortfall hits $840. One afternoon shrinks your four-digit balance down to 160. The driver's seat of a parked car in the lot becomes a waiting room. Tears require an emotional surplus you do not possess. Sitting in heavy silence is your only option. 5 months of dodging financial ruin evaporate on a random Tuesday. You define the entire process with your next step. You begin counting again. Enthusiasm plays no part. A renewed sense of purpose is absent. You restart with the mechanical detachment of rebooting a broken router. The only alternative is living without the router. $40 goes into the account the following Friday. This deposit lacks any cinematic triumph. It is merely the next scheduled transfer. Movies show the triumphant montage. The actual experience involves you routing $40 into a savings account for the ninth consecutive month without any proof the effort will yield results. You rebuild the second 1,000 in 3 months instead of 5. The paycheck did not increase. You rebuild faster because you anticipate the precise shape of the next disaster. You already factored the cost of failure into your budget. Mentioning the savings goal to a friend prompts a nod of approval. He quickly pivots the conversation to a stock tip. He read an article predicting a big run. $2,000 went into the trade, yielding a 30% gain already. The glowing green numbers on his phone's screen serve as the proof. The drive home involves quiet arithmetic. Routing the original 1,000 into that same stock would have generated $300 in 3 weeks. 5 months of grinding produced your initial 1,000. The friend generated $300 by tapping a screen. You feel an emotion that surpasses simple jealousy. You develop a deep suspicion that you are playing a rigged game correctly while others exploit a hidden shortcut. The money stays in the bank account. 2 months pass without a single mention of the stock tip. You ask no questions. You make your first non-monetary purchase with this silence. The cash bought the ability to avoid a foolish mistake. Avoiding the mistake required the visceral memory of those 5 grueling months of dodging disasters. The friend lacked that memory. The balance offers zero protection against actual emergencies. The sum simply carries too much psychological weight to waste on a speculative gamble. That single function provides sufficient value. $1,000 buys friction instead of wealth. Level 3, $10,000. You cross 5 figures on a Thursday and wait for a shift. The day feels like a regular Thursday. The digits roll over and your pulse stays flat. You stand in the middle of your kitchen feeling offended by your own calm. 7 days later, the shift shows up. A text message pops up about a schedule change. Your manager has been building toward this new indignity for months. At $0, that message sends a jolt through your chest. Your jaw tightens and your shoulders hike up while you calculate if this is the week everything falls apart. You read the screen today. Your heart rate stays put. The 10 grand sitting in your account equals 4 months of rent. That manager could be furious and your landlord still gets paid. The message lands on a person with 4 months of runway. Your brain stops producing the panic chemical. You didn't purchase freedom. You bought the capacity to absorb bad news while your hands stay warm. Charts leave out this reality. $10,000 acts as a physical buffer between you and the choices other people make. Refusals leave your mouth, small ones first, an extra shift you hate, a favor you would have performed at $0 to avoid looking difficult. The word leaves your lips flat. The sky stays up. You drive home and replay the moment for an hour. The people around you miss the sheer weight of the boundary you drew. The mechanic quotes $600 for the car. You hand over the cash from savings in a 40-second transaction. Later, the lack of a credit card swipe catches your attention. 26% interest stays off the ledger. You spare a future version of yourself from opening a statement with a new balance. The repair costs $600 and stops there. The debt stays fixed. The hidden tax on your existence stops. At $0, every inconvenience turns into a loan. 10 grand keeps the price tag fixed. The surcharge vanishes without a press release. Rebuilding that $600 takes 2 months. You find the process annoying. The bank account survives. You cross a threshold here. An invitation arrives for a wedding or a trip costing $900. At 0, you would have fabricated a scheduling conflict to avoid admitting your bank balance. The lie cost less than the truth. You attend the event and drop the $900. The drive home leaves you feeling fine. You figure something out about your past self on that trip. That younger version of you wasn't antisocial. You were rationing. Every refusal was a math equation wearing a personality. You get bored next, the system functions. Money enters, money stays, the balance climbs. You add $400 a month, placing 100 grand 19 years down the road. A red light gives you time to run that calculation. You let the math haunt you for the rest of the drive. The search for a shortcut comes from arithmetic instead of greed. You look at the trajectory and realize discipline alone misses the window of your youth. The journey ends right here. The real threat waits at 10 grand. $10,000 makes the plan work. The daily grind becomes unbearable. Wealth remains out of reach. You hold proof the machine runs. A stopwatch in your hand ticks too slow. Level 4 means $25,000. You did the opposite of what people expect. Instead of cutting costs, you changed the money coming in. Everyone tells you to cut costs. You already did that for 3 years. That budgeting sanded your expenses down to the bone. There was nothing left to trim. You picked up a second job, sold a skill on the weekend, or walked into a meeting and asked for a salary number that made your voice crack halfway through the sentence. The number happened because asking costs nothing and you had never asked before. Back at zero, a rejection was a luxury you could not afford. People assume the raise came from newfound confidence. The $10,000 in your bank account created the confidence. You could ask for more because you could survive a rejection. The cash bought the courage and the courage bought the cash. Your monthly income jumps by $1,100. You watch the aftermath with genuine curiosity because you read about lifestyle inflation eating people alive. You wait for the sudden urge to lease a nicer car. The desire never shows up. That surprises you until the reality sets in. You did not resist temptation. The temptation never arrived. 3 years of extreme frugality rewired your brain. Buying things lost its pleasure and became background noise. You possess zero discipline. Boredom keeps you from buying things. The two states look identical to an observer, yet they feel nothing alike on the inside. The entire 1100 goes straight into a new account. The trajectory shifts. 19 years of saving shrinks down to 6. The slope matters way more than the balance. You open a brokerage account on a Sunday afternoon, feeling a nervousness that embarrasses you. $500 goes into the boring index fund every book tells you to buy. Over the next week, the balance climbs $9, drops 14, then climbs 2. That tiny volatility wrecks your nervous system in a way the math cannot justify. Losing $14 physically hurts your chest, and you know the reason. The pain has nothing to do with the amount. You just remember a time when $14 mattered. That ghost from your broke days refuses to leave when your net worth climbs. He stares at the same screen you do and sees a different picture. Leaving the money alone is the only real skill here. Investing means resisting the urge to press a button, and that button feels different based on your childhood. A coworker asks about your investment strategy. You mention index funds and they laugh. They laugh without any cruelty. They laugh the same way you laugh at someone taking the stairs instead of the elevator. They trade options. Their buddy trades crypto. Everyone is making a killing because people only tell their trading stories during a bull market. You feel like a coward. That cowardice is your greatest advantage, even though it feels like being the slowest runner in a race where everyone else is cheating. Market does not ignore you at $25,000. You are too small to scam. Nobody pitches you a private placement. Nobody flies to your office. This lack of attention is the final free shield you will ever get. You lack leverage at this level. You only have velocity. Level 5 hits $50,000. Calling it halfway is a trick. The balance tricks your brain into expecting a peak. 50 grand is serious cash. That stack beats anything most folks ever gather in a single account. The version of you starting from scratch couldn't even picture a number that big. Yet right now, it registers as empty space. You catch the realization on a random Sunday. Crunching the math for the sheer thrill of it becomes a habit that probably warrants a doctor's visit. An 8% return on 50 grand spits out $4,000 annually. 4,000 a year breaks down to 333 monthly. 333 covers a basic auto loan. 12 years of grinding bought a single monthly car note. You stare at the screen. That math crushes your spirit more than any other spreadsheet on this whole path, dropping right when a celebration feels overdue. A different mechanism ticks away in the background, completely off your radar. Your capital generated 4 grand over the last 12 months. You put in 0 extra hours. The regular shift ended on time. A raise never entered the conversation. That 4,000 materialized only because the 50,000 sat there. If you're enjoying this breakdown, take a second to subscribe. Now, let's get back to the story. Back at the bottom, 4 grand meant 60 days of sweating. 60 days of your actual existence, your physical energy, your boring Tuesday afternoons. The brokerage account printed that cash while you were dreaming. You finally share a room with an employee who answers to you. That employee is the past version of yourself. Every hour that younger guy logged is stationed on an assembly line churning out 4 grand a year in perpetuity. The guy never clocks out. Exhaustion never slows him down. A better salary never crosses his mind. You shift your perspective on cash for good. The switch flips in an instant. A $400 coat stops registering as $400. The price translates to 32 bucks of annual passive income you are throwing away. Torturing your own brain isn't the goal here. The calculations run on their own. Your mind installed the new worldview on autopilot and lacks a delete button. A weird version of yourself starts looking back in the mirror. You sit on 50 grand while commuting in a beat-up sedan pushing 140,000 miles. A coworker guesses you are barely scraping by. Letting that assumption hang in the air is the easiest move. Setting the record straight demands a lecture. That lecture demands they grasp the $4,000 concept, an impossible task considering your own blindness to it 9 months back. This milestone marks the precise point your bank balance divorces your outward lifestyle. The crowd below you flashes cash they never earned. You hold cash you refuse to flash. Both groups play a deliberate game. Only your game builds on itself. A 19% market crash hits in March. 50 grand shrinks to 40,500. 11 days wipe out 9,500 bucks, obliterating more than your first 2 years of hoarding cash. You feel the panic in your gut, bypassing your brain outright. The phantom of your broke self jolts awake and starts yelling, aware of what 9,500 represents. That number equals 24 weeks of working late. That number equals 12 months of skipping every Friday night out. Hitting the sell button is off the table. Bravery plays zero part in the decision. Surviving this identical panic attack on a micro level with 14 bucks means you recognize the physical sensation and understand its ultimate payoff. 3 years of exposure to this identical stress hormone built up your immunity without you realizing the process. The balance recovers 7 months later. The folks who dumped their shares cemented their losses. Total inaction becomes the masterclass. $50,000 doesn't make you rich. You walk away with a working engine and proof of your ability to keep both hands off the steering wheel. Level 6 hits $75,000. The balance climbs on its own. A monthly statement shows the account grew by $2,100. You deposited $1,100. The remaining $1,000 came from the money itself. You stare at that line 3 times. You cross a threshold without any fanfare. Your cash generates more income than your labor for the first time. Your savings account drives your net worth now. This is the best news you have ever gotten, yet you have no one to share it with. A dinner conversation yields one attempt to explain it. The other person says that is great, means it, and changes the subject. The significance fails to translate. It only makes sense if you live through the $9, the $14, the 9 days, and the parking lot. Hitting $75,000 changes your relationship with your employer in a way smaller balances lack the power to do. You become dangerous without being loud or difficult. That $75,000 covers about a year of your living costs. Everyone in the office feels the shift between someone who requires the paycheck and someone who chose the job. They cannot name the shift, they adjust to it anyway. Someone asks you to do something unreasonable. You tell them the timeline does not work. The apology stays unspoken. The silence stays empty. That quiet hangs in the air until someone else speaks up and the deadline shifts. At a zero balance, you would have agreed and hated yourself in the parking lot later. The parking lot used to be where all of this played out. You figure out the reality of that raise back at $25,000. Performance had nothing to do with it. You were performing the whole time. The raise happened because your bank account let you hear the word no. Every negotiation you ever lost ended before you even walked into the room. The loss happened at the account balance rather than across the table. An offer arrives next. Someone pitches you on a business venture requiring a $30,000 buy-in. The math checks out. The person is credible. This is a legitimate opportunity. A scam lets you walk away cleanly. $30,000 represents 40% of everything you built over 12 years. You chew on the decision for 2 weeks. Sleep disappears. The lost sleep has nothing to do with the risk. You finally grasp the actual divide between you and people with serious wealth. Intelligence and work ethic have nothing to do with the divide. The divide is that $30,000 equals 40% of your life while it remains a rounding error for them. Those people can afford 10 of these bets. You get to take one. Someone taking 10 bets possesses no extra bravery. They play a different game using the same rules printed on the box. You decline the offer. The choice is correct, yet it still extracts a toll. The toll is the illusion that the gap between you and the wealthy comes down to character. $75,000 leaves you with a single option and the wisdom to recognize it as your only choice. Level 7 sits at $90,000. That final 10,000 drags on longer than any previous milestone. The math tells a different story, showing you clear this chunk faster than ever before. Your account generates steady returns and your income hits a new peak. The system operates smoother than at any point over the last 12 years. 8 months pass, yet each single one feels like a full year. The finish line sits right there in front of you, fully visible. Spotting the end is the worst development for someone who spent 12 years avoiding the horizon. Your whole strategy relied on ignoring the destination. You dropped $40 on a Friday because that was the standard Friday routine. No endpoint existed out in the distance. Only the endless cycle of input remained. Ignoring the endpoint kept you moving forward without hesitation. Now you check the balance daily. 91,200, 91,900, 91,400 after a market shift. You crave this target more than anything else, even though you picked the arbitrary figure yourself. Old rules fall away as you begin negotiating with the clock. Thoughts drift back to your friend and that memorable stock pick. 12 years back, $300 turned into a quick profit in 3 weeks. Recalling that trade for the first time in nearly 10 years reveals a harsh reality about your character. Sitting at 90 grand, you still find yourself pacing a quiet room, hunting for a shortcut. Skipping the shortcut reveals that the broke version of yourself never vanished. That version stayed silent while you were on a winning streak. Month 5 brings an unexpected illness. Nothing life-threatening, but bad enough to knock you out for 3 full weeks. A specialist visit leaves you with a $4,100 bill. You cover the cost without blinking. Afterward comes a quiet moment to sit down and process the event directly. 12 years prior, a $180 tire sparked a chain of events taking 8 months to fix. The debt compounded at 26%. The financial strain bled into the following year and altered your grocery budget. Today, a $4,100 problem pops up on a random Tuesday. That shift represents the real journey, far more than the $90,000 in the bank. A $4,000 crisis and a $180 flat tire now land in the same mental bucket. You label that bucket handled. Wealth doesn't feel any different on the inside. You rarely hear anyone discuss this quiet reality. Holding 90 grand leaves you feeling every bit as ordinary as you did at 10,000. Emotions ignore the math. They only measure the distance between your current bank balance and your deepest anxieties. Your balance climbed and your anxieties climbed right alongside it. You will never feel wealthy and nobody ever does. The guy holding 5 million runs the identical mental math with extra zeros. He gets about the same amount of sleep you get. That outcome isn't a tragedy. Human psychology operates that way. Grasping this concept at 90,000 holds far more value than the final 10,000 you are about to earn. This realization serves as the single tool keeping the next decade from consuming you. $90,000 buys no real security. The money buys a healthy acceptance that enough will always remain out of reach. Level 8 hits at $100,000. The moment catches you on a Tuesday afternoon in the middle of a mundane task. You open the banking app out of habit. The screen reads $100,240. You stare at the digits and wait for a reaction. Silence, the emotion never shows up. 12 years of waiting led to this second. The screen remains a piece of glass. You stand in the hallway gripping the device. The whole thing just ended on a Tuesday. That balance delivers the final and most significant deception. The digits were never meant to trigger a physical response. They were never the real objective. They functioned as a scoreboard. The world spent your whole life convincing you the scoreboard was the sport. 7 days pass. You are washing your hair or driving or sitting in some equally mundane spot when the realization strikes. 100 grand sitting at an 8% return generates $8,000 a year. 8,000 a year breaks down to $666 a month. $666 arriving every month. That cash flows on autopilot from capital already sitting in the account. Back when the balance was zero, that monthly figure paid for your apartment. That housing cost controlled every choice you made for years and swallowed 40% of your working hours. The portfolio now funds your past expenses instead of your present ones. The balance finally matched the effort of the man in the parking lot and rendered his hustle irrelevant. The math they hide from beginners provides the only justification for this whole grind. Reaching the initial 100 grand required a dozen years. The next milestone requires 7, the one after that takes 4. Your skills did not change. $8,000 of unearned income now stands beside you pulling the heavy weight. Next year that figure climbs to 9,000. The following year the capital hires another worker. A dozen years went into training this silent employee. The employee never sleeps, demands 0 perks, and resets every January. The initial 100 grand represents something else. This sum marks the final time you generate capital solo. The difficulty stems from the isolation. This phase represents the only stretch of the journey where you push a dead vehicle. The engine is dead, nobody is helping, compounding has not started, Forward momentum does not exist. You hold 10 years of effort and $40 on a Friday. The mechanics make sense now. The earlier attempts lacked the perspective. You glance back at the version of yourself with an empty account. The final realization clicks into place. That past version maintained strict discipline. That past version kept the books balanced. That past version stood at the base of a steep incline, lacking leverage, lacking reserves, lacking a safety net, and lacking time. The voices at the summit kept shouting that the ascent required a positive mindset. The climb does require grit. The initial 100 grand demands it. That first milestone remains the only segment of the journey requiring manual labor. Right now, you're staring at a screen showing $0.00. A new tire cost $180 on a credit card carrying 26% interest. Running the numbers gives you a payoff timeline of 19 years. You sit there wondering if paying it off is worth the effort. Those 12 years of grinding pay for your escape from this cycle. That time secures your freedom from ever living this way again. You stay the same person at every account balance. That number only changes how much of the world thinks it gets an opinion about you. If you liked today's video, please help us by subscribing to the channel. Hit the like button and tell us what we can cover in the next video.